Hey guys, how's it going? This is Hala Pablo. Hey, I want to do a quick video on Bitcoin. Yeah, Bitcoin. We're going to do Bitcoin right now because Bitcoin's all the rage. Because Bitcoin is pumping, and everyone's like, "How the hell is it pumping? Why is it pumping? The economy is shit," and everyone's been trashing Bitcoin for the past 3 weeks. And Bitcoin's supposed to go down to, if you believe some people, $5, $10 Bitcoin, or whatever the hell, $1,000 Bitcoin. It's just stupid. There's so much stupid crap out there. But anyway, want to just talk about what the hell is going on right now. Guys, be very, very careful if you're considering jumping into this so-called pump. I'm not buying the pump right now. Now, just a disclaimer, this is not financial advice. Can't tell the future. I'm not God. I don't have a crystal ball. Please don't get angry with me or hold me as a prophet or something, self-proclaimed prophet, because I'm not. I'm just trying to read the signs of the times, just like everyone else. You see a thundercloud outside, and it's like, hey, it might fucking rain. That's all I'm saying. So I see a UTAD, what looks like to be like a micro rally, breaking through range resistance with suddenly a bunch of positive market sentiment and media sentiment, especially media sentiment on Bitcoin. Let me tell you something. The the uh, the movers and the shakers, okay, the people who control, the powers that be, the Wizard of Oz that drives the prices, Bitcoin, Ethereum, XRP, Solana, AVAX, whatever it is. These are what we call the composite operators or the market makers. These are entities with, these are informed interests with billions of dollars and with a whole host of algorithmic trading bots set up, indexed to each other and such. These entities are not your friends. They want to destroy you. Okay, they are antithetical to everything that you are trying to do and your financial future that you're trying to build in crypto. All right, they are looking to destroy you. All right, and these guys, these entities, I want to just call them entities or informed interests, they are using the media. They use the fear and greed index, which is inherent in herd mentality, in trying to figure out or determine what you're going to do, what your next move is, what the herd, what the average Joe retailer is going to do, where he's going to put his money, where he's going to put his stop loss and such. And they go off the media. They use the media as a catalyst. So you got to think about that. Last week, everything was gloom and doom. It was like crypto Armageddon, right? Bitcoin was going to $1,000, and everyone had their TA, their technical analysis and fundamental analysis to prove it. And then you had the whole other section saying no, Bitcoin is going to moon and such. And so, but the general consensus was very gloomy for Bitcoin, and that was propagated by the media. And they're even calling it, you know, a scam and a Ponzi and all this stuff. The media just craps on Bitcoin. You got to ask yourself, why suddenly the shift? Why is everything so bright and optimistic now? I mean, I just read an article this morning talking about how Bitcoin seems to have reversed. It's broken through several crucial resistance barriers, and it's established new support lines, and investors are now emboldened to jump in. And could this be the reversal? And man, everyone's just so speculative right now. Be very careful, because the market makers, the informed interests, are using articles like that as a catalyst. So you could usually be sure that they're going to use that against you if you decide to FOMO in to this thing right now, thinking that Bitcoin is going to do nothing but moon now and that the reversals are over. And you kind of see that. And this is a well played, it's a well played psychological schematic that was defined by Richard Wyckoff 100 years ago, and it's played through, and it is still true today, the Wyckoff schematics. So I'm not saying that this is what's going to happen, but I am saying that I have seen patterns like this. I've been in crypto since 2017, and I've seen so many Bitcoin ranges and how it's played out. Now, Bitcoin does have a propensity for bucking the trend. So you think Bitcoin's going to do something, it should do something psychologically, and they're betting against that. And then they're betting against that, you're betting against it. So if it's too obvious that you're anticipating something, then it'll double. It'll double outsmart you. So Bitcoin is treacherous. It's the most dangerous commodity to trade. I don't know if you call it a commodity or a crypto. It is absolutely lethal, and so you got to be careful. So, but right now, I would not buy this pump. Now, this is a schematic that I have here that I got off the internet from Stock Charts, and it shows a classic UTAD. Now, this is coming out of a buying climax, whereas where we are right now in real time, we're coming out of a selling climax. So it's the mirror image of it, but the idea behind it is the same. You get this intra-channel or intra-trade range consolidation, where the price action is hitting the trading range resistance. Here we have the first one. It stopped out at the buying climax, came back down, automatic rally. That established the trading range support, and then it came back up to a secondary test. We can kind of see that here. It came back up, secondary test, the automatic rally, sign of weakness, that could be right here, and then it comes back up, another secondary test, goes back down again, another sign of weakness, and here we are seeing the rally, the micro rally, and it breaks through trading range resistance, same rally right here. It's coming back up, and it's coming up on climactic volume. I want to make that clear. So it does appear to have real, genuine demand fueling it. But here's the thing you got to take into consideration. Everything prior to this event that we're seeing now has been on bearish bias. For example, this corrective wave, these two corrective waves, this wave and this wave are corrective. And we see during the corrective waves, we're seeing an increase of supply. So we have divergence in the vertical bar volume against the price action, against the corrective wave and the price action. And that is bearish, especially when it pertains to supply. We see the same thing again here. This is number two. Again, we have an increase in supply. So we have two clear divergences on intra-range corrective waves. And then we see when the price action does come up and hits trading range resistance, we're seeing large volume spikes in demand, but with a failure to rally, a failure to continue to rally. And so that's something else that we need to look at and take into consideration, the consistent and common failure to rallies being displayed in this trading range. And we also see clear predominance of demand. We have increasing demand on the pullbacks like we talked about here, and then when on the impulse waves, when it's gone back up, demand really has a chance to shine, and it doesn't. We see the demand that follows the corrective wave being less than impressive, and it doesn't predominate. The only time we see the spike is when it hits the resistance, but then it's completely, it doesn't go anywhere, it comes back down, we're back down on low volume, and then supply begins to build again on the pullback. And then on this range here, where we saw this pump that we're currently in, the beginning of the pump for the first 1 through 3 waves in the Elliott wave, we've seen the decrease in demand, clear decrease in demand, and only then when it crossed through trading range resistance have we seen the pickup in demand, and it's brought it to the 1.272 where we currently sit. Usually, if it's a UTAD, it'll hit the 272. It can even go all the way up to the golden fib ratio, to the 1.618, where it'll begin to consolidate at this point on volume that is either begins to decrease on decreasing demand or increasing supply as the supply candles, as the bear candles begin to emerge and supply begins to build in the vertical bar volume. And that's when you begin to see the LPSYs, the last point of supplies, register as the price action begins to fall and go back down into the range, into the trading range, where the trapping in effect the bull traders who bought into the pump. See, what happens is they're buying into the pump here. If you're tempted to buy in, you could be buying in, and buying, as you're buying, the market makers are selling into the pump, and you're buying their overbought crypto at that point, and with the whole intention of to have you hold that bag when they reach whatever the pre-designated bear block area is, whether it be here at the 618 or up here at the macro liquidity void up around the 2618, which would take it to $30,000 Bitcoin. So these pumps here are actually legit, but there's no intention of mooning. That's the difference. You may think that you're going to moon at this point, and that's what the media propagates, and that's why people put in these big, come in with this big money, and only to hit that brick wall at the 1618 or the 2618, and then they hold on thinking that we're just going to reaccumulate and keep marking up from there, when in effect that was never the intention at all by the market makers. They were setting you up to hold their crypto so that they can bring it back down to and retest a lower liquidity void at the 17.5 and go even lower than that possibly. Who knows? At that point, we don't know. All we know is that we have to be careful at this point and use the market as a contrary, use the market media, the media sentiment, and what the media is trying to do, because the media wants to manipulate your emotions for either fear or greed, and use that as a catalyst. And then what happens is the market makers jump in and use that, like we talked about. So you got to be careful. You got to understand that, and oftentimes use these sentiments as a contrary indicator. So if the media is saying Bitcoin is reversing and everything looks great, then we need to be like, oh crap, it's probably a trap now. And the same thing opposite. Everything's looking bad and it's a Ponzi and all that. Get ready to pump, just like down here, just like we saw. I mean, I just read a whole bunch of articles earlier this week about crypto. I mean, just the most horrible, frightening things about it being outlawed, and it's not going anywhere now. Now it's going back down to 15,000, 13,000, 10,000, and then this is what happens. It has a reversal in a pump. We'll see how long this pump lasts. Just be wary. Be very wary and be very careful in this crypto. It's lethal. All right, guys, let me let you go. I got to go. That's it. I rambled on long enough. If you got anything out of this. My thoughts are really disjointed today. I'm sorry I couldn't be more coherent, but I'll have some more updates for you later on. Okay, guys. Thank you. Have a good day, and adios.